what we have is rising consumer prices, an approaching financial crisis, silver approaching an uptrend line that was established in 2020. We could see a smash in silver, but gold, we've seen a lot of spot activity, a lot of warrants changing hands, a lot of bottom picking by rich clients of JP Morgan. We could be getting close to a bottom in gold, just above 2000. And once we have open interest settling down in silver, I believe it will be time to buy for the next round up, which will, of course, go vertical once the Fed is forced to print more money for its buddies.
Amplified global demand will also be a catalyst for higher silver prices. The Silver Institute is forecasting silver to reach as high as $30 per ounce, constituting a record high. According to data provider LSEG, Rafi Farber, a prominent figure in the financial market, states a rise in consumer prices and a looming economic crisis. Meanwhile, silver approaches a crucial uptrend line, and gold suggests a potential bottom in active transactions. Economists anticipate a decrease in the year-on-year CPI to 2.9% for January from December's 3.4%. A softer CPI could weaken the US dollar and bond yields, potentially propelling silver prices higher. Markets are currently factoring in 4 quarter-point rate cuts by the Fed this year, with a 62% likelihood of the first cut in May. Regarding silver, Rafi advises traders to be cautious while staying positive about its future, considering broader economic factors. Gold has always been ahead of silver when it comes to being a store of value. However, silver's duality as an industrial metal and a precious metal could allow it to see record highs this year, according to the Silver Institute. Moreover, Rafi points to regional banks' significant losses in the last 2 years. While expressing concern about an impending crisis, he foresees the need for more monetary interventions. On Wednesday, the 31st of January, Federal Reserve officials removed language from a key policy statement qualifying the U.S. banking system as sound and resilient, a phrase it had used since March 2023 to reassure the public that regional lending problems were contained. That same day, fresh turmoil at a New York regional bank offered a reminder that those problems are far from over. Now, we present the clips of Rafi Farber's insights from his recent video with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
If we look at this silver chart, we have something interesting technically going on here. An uptrend line from the March 2020 low of around $11 and whatever it was during that panic sell when the world shut down and everything was normal. And that trend line was established here in July 2022 at the lows for silver about 1750, I think it was. And then we tested it here again. We're testing it right here again. We could break through this trend line, leading to some panic selling down to, let's say, 21, 20, 19, something like that. I'm not predicting any numbers, but I'm saying it's very possible here if the technical traders get spooked. And the open interest numbers suggest that this is possible. Just be careful of it. And if we break this trend line, that's not the end. That's just going to take out the weak holders and leave silver into very strong hands, which is going to give us room for the next rally, which will hopefully break this uptrend line and get us going on the next phase. But as to the next phase, I want to show you, zoom out what's happening here. So this is silver going back to 2007, right? This box here, this rectangle box, this was the upper range, excluding, the crazy rally from 2010 to 2011 that ended with silver at 50. So in normal times, this is the upper range for silver prices since 2008, at least. It was the upper range in that initial rally in 2016. But now, since 2020, it's been the lower range, and we've been trading above this line, above the $20 line, for a significant period of time since 2020. So for about 4 years, excluding a few months here in 2022, we're still above that line, and we could hit $20 here, as I said, if we break the trend line and we have panic selling down to this area over here. But even that wouldn't be bad at all, because it's still above the high zone for silver that we've seen since 2008. So look for a smash around 20, possibly. And then from there, a recovery along with gold, and then possibly a slingshot if we're talking about a banking crisis and the Fed turning. Once the Fed prints again, this is going to go close to vertical, just like we saw here from 2020 to August 2020 here, except it's going to be much more extreme. It's going to be something more like this from 2010 to May 2011 over here. And I think it's going to be stronger than that. I'm not exaggerating, at least not in my head. So there are banks that are doing a lot worse. Regional banks are doing a lot worse than US Bancorp, which is one of the biggest regional bank. It's the fifth largest bank in the country. So here we have US Bancorp has lost over 30% of its market value in the past 2 years. Key Bank, the 22nd largest bank, has lost 50% of its value over the past 2 years. Comerica, sounds like Seinfeld, but as the 32nd largest bank, has lost 50% of its market value in 2 years. Western Alliance has lost 45%. Valley National Bank 43%, and First Foundation Bank lost 70%. So we're headed for another regional bank crisis, which is going to lead to another printing round. We'll see how extreme it gets and wait until those reverse repos run out, because they will, and then we're going to get into something even more extreme than a regional banking crisis.
During the interview, Rafi Farber mentioned the short squeeze in silver but warned of historical correlations between high open interest, indicating a smash in silver. The metal shows signs of an upward trend, but traders should closely monitor the resistance area between $23.92 and $24.39. Successfully surpassing this range is critical for maintaining the current upward trend in silver prices. Highlighting a potential gold bottom, he pointed to increased interest in spot gold, indicating bottom picking by individuals, notably JP Morgan clients. Gold has lacked directional conviction since the beginning of 2024. With prices oscillating between technical resistance at $2,065 and horizontal support at $2,005. Although bullion's prospects seemed more positive a month ago, the bullish thesis appears to be on hold for now, especially after the Federal Reserve indicated that it is in no hurry to start lowering borrowing costs. Let's get back to the interview.
Silver open interest, again, this week. We covered this last week, but it's getting more acute now. So you want to be very careful here. There could be some kind of attack on silver this week, next week, in the next 2 weeks. Just be cautious here, and I wouldn't go into margin for any reason. That can really mess you over, but just be cautious here and don't get too greedy thinking that we are at a low here. We could be, and we could be setting up for a short squeeze. That is definitely possible, and I don't rule that out. But judging by this chart, you want to be careful of these open interest numbers. So we see here the last 4 times we had a similar amount of open interest, meaning the number of contracts open in silver COMEX and COMEX silver. Those last 4 times have corresponded with intermediate highs in the silver price. So the thing is here, we're at looks like a low. So yes, we could see a short squeeze here, but we really went higher. I think it was 5,700 contracts higher in open interest in silver yesterday. So we're at 152,544, very high, especially over the last 2 years. Not historically high, but over the last 5, in the post-COVID era. Let's say COVID again, and really get that sticker and that who link down at the bottom of this video. Yeah, let's root for it. So over here in April 2023, there was a high here in the silver price and high in open interest. Same thing here. Same thing here. Same thing here. It's not every time, but you want to be careful here. We could see a smash, and if we do see a smash, it could really bring down the open interest numbers as shorts cover quickly. So this could be a flash in the pan, but you still want to be careful of it. We also have something interesting going on in gold deliveries. This happened yesterday. So gold open interest is still pretty low. It's below 420,000 contracts, which is historically very low. But we have here, this is the numbers for Wednesday, February 14th, I believe, and we had an increase in spot gold. The February contract, remember, is not futures, it's spot gold. We had a lot of, actually, the spot gold contract was the contract that increased the most in open interest on Wednesday, February 14th. And all of those went to delivery. You can see here, we had 1,638 deliveries. Right, the 1,493 were bought for immediate delivery on that. So there's a lot of buying in spot gold yesterday and in taking of those warrants. So where do those warrants go? I highlighted here the daily delivery for February 16th. So we see here the H means a house account, and issued means making the delivery. Stopped means taking the delivery. So we have 3 house accounts here. These are big banks. Wells Fargo, big bullion banks. Wells Fargo, Scotia Capital, Bank of America Securities were the biggest deliverers of gold warrants for 100 ounces each. And who was the biggest stopper, meaning who took these deliveries, the bulk of them, 1,283, that's JP Morgan, but not the bank itself. This is a client account. So we had house accounts, banks selling to clients of JP Morgan. Who are the clients of JP Morgan? Some other reportables, family offices, wealthy individuals, those kinds of people. We don't want to know who they are. Best we not know. We don't want to get involved with them. My point is we have a lot of spot gold buying yesterday, and that looks like bottom picking by wealthy individuals who are clients of JP Morgan. That's what the data says yesterday. We'll see what happens if they've picked the bottom or not. It could be close or they could be a little bit off. They're usually around the right time. So look for a bottom in gold over the next few weeks, and silver will probably bottom with it. But silver is probably going to have an open interest smash and a lot of short covering to make room for another rally in silver.
According to a report from CNBC Sunday, analysts forecast that the price of gold and silver will rise if the Federal Reserve cuts interest rates this year. What are your thoughts on silver's future and its potential to reach record highs? How do you perceive the current economic indicators affecting the trajectory of precious metals? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.